Let's talk a little bit about one big growth area in this country, and that is ETFs. The data for 2024 showed continued expansion with assets under management in ETFs north of $560 billion. And certainly you've got a lot of big questions right now. We just talked about them for Canada with things like tariffs, and yet the trends for ETFs are still pretty impressive. Bipan Rai is Managing Director and Head of ETF and Structured Solution Strategies at BMO Global Asset Management, and it's nice to see you, sir.
Yes, nice to be here.
So this is one of the most interesting trends to watch in Canada, the continued growth of the ETF market. The mutual fund industry continues to be larger in size and scale, and yet there has been this amazing growth in the ETF world.
Yeah, I mean, it really does speak to the fact that investors are becoming more and more sophisticated. And also the ETF allows them to track and really follow financial strategies that they wouldn't be able to several decades ago. So it does mark a significant milestone for the growth of the industry. We feel there's plenty left to go going forward.
Yeah, at a time when, people are not just looking at stocks, they're looking at different parts of the economy. They're looking at currencies is obviously something you've spent a lot of your career focused on as well. And these are products that allow people to slice and dice in a lot of different directions.
Absolutely, and you get exposure to different strategies, and you get that diversification benefit as well from choosing a particular sort of strategy if you want to invest in. And again, a lot of it has been associated, especially over the last couple of years, with broad beta plays. If you're buying, an ETF that tracks the S&P 500, you've done reasonably well. But even in environments where we do see markets sort of trade a little bit more defensively, there's so much more in terms of options that you could look at potentially when it comes to ETFs and trading defensive strategies as well.
And one thing that was interesting with the guest we spoke to earlier was it was a bullish view on the stock market and a bullish view based in part on demographics, that there is a younger generation that is transitioning out of being the consumer to being the investor, being the saver. And heck, we're in a bull market. It's hard not to hear about people making money in the markets these days, and that would seem like some kind of strength for ETFs as opposed to some kind of weakness.
Absolutely. I mean, let's call it the quote-unquote do-it-yourself investor represents a huge source of opportunity for the world of ETFs. I mean, I really do equate the ETF to sort of the modern and sort of version of the printing press and what it did to expand really literacy in the developed world. And again, history is a pastime of mine, so I tend to lean on that for examples from time to time. But really, ETFs are the same sort of financial innovation tool that really allows your do-it-yourself investor to invest like a hedge fund or portfolio manager from a couple of decades ago. And I think that's a very powerful tool. But again, it's incumbent on us to also remember to remind investors, especially the do-it-yourself audience, to really educate yourselves and really know what you're investing in before you buy the ETF.
Well, that's a fair point as well, because when you're creating all these other avenues for investing, it's not just what you're buying, it's how you're buying. Leveraged products obviously have gotten a lot of attention over the years as well, and they're exciting products. It's just you have to know what you're getting yourself into as well.
Absolutely. And a lot of it is a sort of self-education, but we have education and training resources as well available on the BMO Global Asset Management website as well that I would encourage our audience to look at if they're considering ETFs.
So crypto is a subject that's getting a lot of attention with the incoming Trump administration, but I've said it before, I'll say it again. Without the highly successful spot Bitcoin ETF launches in the US, I know Canada's had crypto ETFs for a period now, it's hard to make the argument that Bitcoin would have had the kind of year it had last year, even with all the bullishness that was coming from a Trump presidency. How are you viewing just the crypto ETF conversation as it pertains to just people's awareness of ETFs in general?
Right. So, I mean, if I'm looking at cryptocurrencies, I'm looking at, say, a Bitcoin ETF. I'm really tying that back to the fundamentals. Now, you might say, well, it's cryptocurrency. What is the fundamental there? And again, I like to look at two factors. One, what is the, say, the U.S. Treasury doing with respect to deficits and how large they are going forward, and also what the Federal Reserve is doing with its balance sheet as well, because it doesn't really appear to be constraints to either of those at this point. And of course, you toss in the momentum coming in from Trump's inauguration and what he said about the space before, and you really do have this sort of mix of powerful forces in favor of, say, Bitcoin as an investable product going forward. And I think that does have some momentum in the near term for sure.
Now, one of the things about tariffs, we're trying to figure out what that means for Canada's economy. We have already seen the weakness in our Canadian currency. Now, the Canadian stock market has been having a pretty nice run. I've even seen some strategists making the argument that in a maybe less direct way, if tariff worries prompted our Bank of Canada to cut interest rates even more aggressively, then maybe, and we've got a number, I mean, the TSX is very interest rate sensitive.
Yep.
But I guess, how are you thinking about if there was a hiccup for the Canadian stock market just because of all of these unknowns? Do ETFs feel like they are earlier in the pecking order of getting hit? How do they factor in versus just the overall performance of the TSX, do you think?
So that's the beauty of the ETF market, in that if we do see a period of, say, defensive market behavior, if the Bank of Canada does elect to cut rates because the fundamentals don't look so strong in the Canadian economy, there are fixed income ETFs that investors could look at to serve as sort of that portfolio ballast. There's also ETF products such as buffer ETFs that trade quite frequently that allow investors some protection to, say, upwards of 15% to the downside over the coming 12 months, and allow investors to remain invested. And I think that's very important, because more and more what we've noticed is that when you do get a sell-off in the market, immediately you get a subsequent rally as well. It really speaks to the amount of leverage that's in the market. So again, a lot of investors tend to miss out on that opportunity to get back and at more favorable levels when there is a sell-off. So again, there are ETF products out there, structured outcome ETFs that you could look at. Also some other asset classes that serve as portfolio ballast, your traditional sort of equity beta play, that I think are investable alternatives to sort of withdrawing and sitting on cash over the medium or at least over the short term when we're having a meaningful drawdown.
All right.